What up? What up? All right. So today we are back with a brand new video. And as you can tell, we're on the computer today, not the iPad. Okay. But how are you guys? Haven't talked to you in a while. Yeah. It's been a fun time. I've been trading, teaching, skating, smoking this blunt currently. Same old thing. But today I wanted to talk about something special. Okay. So if you're familiar with Goldbach levels, or maybe you are not, this is the perfect video for you. Okay. So, long story short, and the reason why this is on my screen, right here, and I have a few things I wanted to kind of cover to just give you like a understanding of why we even give a fuck in the first place, if I'm honest. But when we talk about ICT or we talk about PD arrays, right? A lot of times in the marketplace, when we are going, and we'll get back to this area, a lot of times in the marketplace, when we first learn about ICT concepts, right? Order blocks, fair value gaps, breaker blocks, right? It's interesting that you're learning bits and pieces of the algorithm, right? Oh, there we go. Blood's on fire. So you're learning bits and pieces of the algorithm. What always made it difficult for even some of the best ICT traders that I know is, and I'm gonna give you an example, and that's why I'm looking at the euro right now. When you're looking for fair value gaps or order blocks or breakers or mitigation blocks. Now, the reason why I'm using fair value gap first as a example, because it's like the easiest one for a lot of people to find, right? It's like the probably like the most stable PD array that people like to use. And so when you first learn the concept, it makes you feel like very special because I mean the fair value gap is very ultimate. It's a really powerful concept once you really understand the logic behind it, what it looks like, how to identify it, how to interact with it, right? But my problem is why I just put these two on the screen is obviously prices sell side. But I still have a lot of traders that come to me and say, you know what, bro, it's a million of these things. There's a huge bullish one right here. There's a huge bullish one right here. Yet we only come and we support this small bearish fair value gap and we drop, right? And then another one here and then we drop again. My point, right? When you were taught about the algorithm, and Michael did such an incredible job. ICT is one of the best traders in the who ever lived, right? I completely agree. And a lot of his work, I mean, we use his work every single day. Never take credit from Michael, and I'm so glad that again when we get to Hopi, he also did an incredible job. If I could put it like this, right, in my opinion, I feel as though ICT gave us like, you know, 90-ish percent right, or like 80 90% right, whatever. And Hoppy came in and gave us the very last piece of the puzzle that we needed. And that is why we're talking about Goldbach levels. All right. Now, the thing about Goldbach levels, right? And again, if there's an algorithm and you believe that, that means that there should not be still like a measure of randomness to the PD arrays. So like if you're telling me that again, all these things exist. London has functions, New York has functions, AMD or the power of three is playing out all over the place, liquidity, and I have all these PD arrays, right? So again, I'm heading back to why. I simply want to ask the question why. When you watch an ICT video and he goes to actually take a 1 minute perfect fair value gap, right? No, just in my opinion, the 1 minute is completely ultimate. Just wanted to state that. But when you watch ICT, any execution video, right? And I lost the lighter. You notice how every single time he takes a P array, whether it's order block, fair value gap, new day, opening gap, whatever it is, it works immediately. The moment he touches that thing, it starts spooling towards his take profit. He's just basically trade managing the entire time, right? And then he'll tell you exactly what the trade's going to do, where it's going to land, right? When I tell you this is not difficult, you just never learned the very end to the piece of the puzzle. And that was always the problem. That's why when you're still coming in the marketplace, you're trying to figure out, yo, there's so many freaking fair value gaps. How do I know which one is the one to actually pay attention to? How do I know which one's going to react? How do I know I'm actually in a real premium or a discount? I know what you're saying. Michael already explains it. Yes, he explains a lot of it, but not all of it. And so, in my opinion, doesn't matter, you know, whether you're a new trader or a seasoned trader, right? What if I told you that, like, yes, these things have order. Goldbach levels are essentially breaking down ICT down to the actual math of the algorithm. Hear me out. Let's light the blunt. When we talk about the algorithm, right? Teach you about how it runs. And again, I want you guys to, do your research, come back. I have a bunch of videos of these dropping, right? Do your research on Hopi. Understand where this logic comes from. Go read the book, okay? But what I do want to talk about is, again, the funniest part when we talk about the power of three. Now, when I just type that, right, or you're hearing me speak, the first thing you're going to think about is what? AMD. Accumulation, manipulation, distribution, cool, right? Now, there's also something that Michael was trying to tell you, but he couldn't really tell you all the way. And it's funny that if you go back in a lot of some of his older live streams and people ask him, yo, Michael, what's your secret weapon? And he's like, the one I would never teach you. And this is that secret weapon. So he's not only talking about AMD when he says the power of three is how the market runs. You got to think in terms of basic math. 3 to the power of 3 is what? 9. 9 to the power of 3. You get where I'm going, right? Now, we could do a bunch of these. 3 times 3, 9 times 3. What's 27 times 3? 81. 81 times 3, 243. And so on and so forth. Okay? Now, really quick, what the algorithm does to generate up swings, down swings, right? It's using this math to calculate your dealing ranges. Now watch. Now when I come up here, And I'm on the Euro USD. Okay. Now, we actually have an indicator if you've never seen it before, and I'm going to take off all the wild shit. But long story short, when we have, I wonder why it's like inverted like that. Oh well. Long story short, we're going to check out these levels. Okay. Watch this. No, turn these back on. Okay. I'm going to upshift it. There we go. Here we go. Now, you want to know what's funny? When I start on weekend, Saturday, Sunday, right? This is actually just giving you basically like where the week starts and the week ends. Okay. This is a good blunt, by the way. But my thing is, if I'm talking about the power of three and how these numbers are calculating all of your actual market movements. And you want to know what's funny about this? Watch this. Do you notice? And I'm focused on last week. Okay. I'll show you something. Now I'll come back to that. Now, what we have on our screen, right? Just make sure it's still, yeah, cool. Now, what we have on our screen, right, is a real dealing range. Okay. Now, how you were taught. He talked about swing high, swing low, or vice versa, right? And from that, you're calculating like the midpoint and trying to find your premium and discount, right? But the problem with this logic, without this equation, it's useless. You can still figure out if you're, at the top or bottom of a price swing. It's not very hard. But at the very, not even to just make it less difficult, but for you to really understand what the market is really doing to move itself, this is what the algorithm is referring to. So when you see all these points, this is not form fitted. It's doing the math for you and putting it visually on the screen. Okay. Now, when you look at this, now again, I'm gonna turn my sessions back on so you can see. Again, anybody who has never seen my chart, let me explain myself and we'll annotate, right? So this is Monday. Okay. I have my Tuesday, Wednesday, and so on and so forth. Okay. Just gonna move these. Full, and I can just change them, right? So like Friday, that's how I do it. If you want to, ever wanted to know how to do that, that's control and then just move with your mouse, like whatever you want to just move, right? Um, oh shit, is that Wednesday? Yeah, there we go. Monday, and then, quick way to label your days if you need to do that in a quick hurry. Monday, Tuesday, Wednesday, Thursday, Friday, cool. All right. Now, again, this is the weekend, and so, this weed is really good. My bad. I'm just excited to smoke this fire blunt. There we go. I stay losing my lighter though. It's the only problem. Now, what you're looking at, and you can notice up here I have a cheat sheet. Okay. There's a bunch of these numbers that I mentioned, right? 3, 9, 27, 81, 243, and so on and so forth. It's doing all of these times 3, right? So what you're looking at, right, and why this is color coded a certain way, I don't want to take these off again. If you notice that, again, on the Sunday, the levels are the real support and resistance. You can actually come in and know exactly where the market is going to go. It's completely telling you. So what I mean is, now over here we have labels, all right? So all of these actually have a specific purpose. Now, the first thing I want you to get comfortable with, it's a lot on the screen, I know. There's a low, an EXT level under that low. There's a high, an EXT level above it, okay? I also want you to notice the equilibrium or EQ level. What I'm basically telling you is that dealing ranges are fractal, okay? Obviously. Everything in the marketplace is fractal. The candles themselves are fractal. The concepts we use to trade are fractal. Goldbach levels are fractal, right? Structure that we use to trade is fractal, whatever. Now, a big thing I want you to understand here. These are the real highs and lows. So when you look at the marketplace, right? And notice this, when you jump into a new week, last week, right? And this Sunday, we're in Monday now. It's about 5 a.m. or whatever. It's actually Sunday. It's a Monday. And you'll notice I'm on UTC plus 2. I'll talk about that later. But there's a reason why. Okay. So London session, okay, we open, we trade down on London. Obviously, stop in this fair value gap and we blast up. Now, notice this. Where does price really consolidate? Right on that EXT level. Goes a little above it, but has trouble really breaking this. Now, when we drop down, we create liquidity here, equal lows, right? Just keep that in mind, right? But we're really talking about how price is bearish, obviously. Again, given the context, look at where we spool up to once more, right to that EXT level. Not up here. We go right back into this level. But we are in this dealing range, right? And what I want to basically show you is that why I'm looking at the Euro USD. When we look at, and again, every single asset you've ever seen in the marketplace is really running by these invisible levels. That is now, I mean, thanks to DMN being able to code the indicator and making our jobs 10 times easier. People that know about Goldbach basically like had to do the math by hand. But now that we have the indicator, it's a lot easier to learn this, understand this, teach this, trade this, whatever you want to do, right? So my thing is, I want you to notice again, price is being influenced by the levels. So do you notice that the 81, right? Each one of these power of 3 dealing ranges has a low and a high number, right? So if my high here was 1.17780, okay? Goldback is already doing the math for you. So when this dealing range is moving, and watch this, we're actually going to go to the replay. And when I go to my replay, right, I want you to just notice how the dealing range, the same way you're viewing it right now, it's not because we're just floating randomly through it and it's trying to tell you, oh, it's like a RSI or a stochastic oscillator. It's nothing like that. If you're in this dealing range, the way I'm telling you, right? Now watch. It's obviously shifted because we're Okay. We got to shift it because we were upshifted, right? Now watch. Okay, we got to go back. Let's go back. So now you notice how this is another partition above us. Once we pass that high, you're actually in another dealing range above you. They're stacked. So there's an 81 above the one that we were just in. There's one below that, and below that, and below that, and below that, and above that, and above that. It's, you see what I mean? Once it's done going through one, it's just going to go through another. Okay, now watch. So if I start here, you'll see that it's going to shift. Now watch. Oh wait, we forgot to move it down. Come on now. All right, there we go. Can we do it correctly now? Third time's a charm. Now you'll see it shift. Thank you. Now, I want you to see this, right? Now, I'm telling you, the high here, 1.117, no wait, 1.11780, right? Exactly. When you see price starts to give a lot of consolidation, it's hard to break this partition to the upside, and it's supportive from this high area, leaving liquidity down here. And so far, we've only talked about the low and EXT levels. Now, if I'm telling you that this is a dealing range, what does that mean? Something should have went off in your head already. My EQ level. What does that do? That separates my discount and my premium. So that means that in this dealing range, above this blue line is a premium. You need to be selling in a premium, buying in a discount. Do you see what I mean? And look, when price is really, really, really respectful of this dealing range low, you see what I mean? When you jump into it, you have to understand where you are. It's telling you completely where it's going to go. So when you're at this low down here, which is 1.0, 1.10, 970, you know the high of this dealing range and partition is complete. I'm going to tell you that much. You know the high is 1.11780. So you know not to get out of your trade here. You know you're still in an actual discount and you're waiting for price to seek a premium to take profits at the high or the EXT level. You want to be a seller in a premium, buyer in a discount, clearly. And so when price leaves you all this perfect liquidity, right? And obviously we've seen it in hindsight, we'll run it down, right? Boom, smacks that. But now watch. What just happened? Where do we react from? Like directly. That EQ level, don't we? Right there. Look at that. Bounce off the EQ. Then you drop all the way back down. But you notice, again, you're being influenced by the levels. And if you knew that you're in this dealing range, and again, you're trading with this indicator on, you can see the levels before we are there. Bullish, bearish, no matter where you are, you know the high and low of these dealing ranges. And look at that, all the way down. And it's going to act like it's not going to complete, right? And then look at that. Smacks it. Completely smacks it. Look at that. There we go. Full screened it. Had to full screen it for you. Beautiful looking. So when you see all this in here, right? Look at this. That's your Wednesday, right? We know we normally have really, really nice distribution coming from Wednesday, right? Thursday too. And look at the price action. Perfectly downside. Stops at your EQ level for a second, hits a fair value gap, right back down. And then look where we react from every single time. Look where we react from. But you understand where your terminus is. How do you think ICT does this every single time? He might not trade with the levels on screen, but my man understands the logic to the market. The algorithm is not random. And I haven't even gotten to the best part. So when we talk about all this, right, I'm showing you how the market is so organized. Now watch. Where to from here, right? There's another dealing range underneath you, like I said. And price is spooling, right? You're in a premium still, and you have to sell that. Do you see how every dealing range is fractal, right? And again, we haven't left what's called the 81 dealing range. So now watch. This is where we are now, okay? I can go to a bigger one. Now look at that, right? Now what we're going to do is we're going to go to a daily chart. And I want to show you this. All right, it looks kind of messy, right? But now watch. Fuck all these annotations, right? Now watch. Look at the screen. Look at what we're up to. Do you see the low again? We jumped in this dealing range. Where did price have trouble coming back down? Right at that EXT level. And look, huge fair value gap, right? Now, I'm going to show you what I mean. Watch. I'm going to downshift this. I'm going to come back here in a moment. But I just want you to see that again. Where did we land? Look at where we react from. It's perfect. And if you're down here and you see prices at 1.09640, you can come to the 243 dealing range and see that the high is 1.11780. You can come and see that. You understand that you can take a trade here and buy in this area and then take profits up here because it's going to reverse. And you can see that the EQ is going to separate your premium and your discount so you know if you're buying or selling. It's not difficult. But what is difficult is putting it all together. And I want you to understand something. Now, final parts of this lecture before we make a part 2 tomorrow. All right? Now watch. Now, really quick, I'm on the 243, okay? So I'm going to annotate that really quick. So we're on the 243 dealing range. But I want you to notice something, okay? There's labels here, right? Numbers here, right? Okay. The low is 0. The high says 1, but it's really 100. This is a 100% of a swing. I want you to think about that. From 0 to 100. That's what price is aiming to do. Up or down. Okay? Now, the thing is, with these labels down here, let's take a look. Do you notice now where ICT's work starts to play out? RB is this red line, my low, to the yellow line here. It's a very small area. And this is for my rejection block, where that can be found. When it's going to work, it will work here. My order block, OB. This level is a little bit bigger from my yellow to my blue, right? A little bigger of a level. Now, my favorite, FV, fair value gap. What's my second favorite? See where my blue is highlighted? Now I have custom colors, so you could, come in with the indicator, copy my colors, or you could do your own colors, okay? And so coming in like this, right? This is where I'm telling you, if you want to take fair value gaps, this is where you find them. PD arrays don't work randomly in any spot. They're actually organized in order. And this is all hidden underneath your candles. This indicator brings it to life so you can see it visually and you could trade it. So the same way that I'm telling you, look, I want you to think of EXT as like the discount to the discount, or the premium to the premium. That's what we use for or reference like for EXT. It's your previous dealing ranges order block level. It's down here. And so that's why it's such a powerful level when it looks like this, actually causing an order block, right? Now, again, you want to take fair value gap? Look at this. Perfect fair value gap, right? Obviously. And it's a beautiful one, too. Very easy to spot. It's not small, right? Wicks do the damage. Bodies respecting. And again, what do the bodies actually respect? Our fair value gap GB level, Goldbach level. It's powerful. Now look, right after this level, you're met with the next level. And I want to really, really talk about this. This is my favorite level. Fair value gap is number 2. LV, liquidity void. Now in my mentorship, we have an inside joke, right? Hold on, let me we have a little inside joke in my mentorship. The LV level, we call it the Louis Vuitton level, because when you understand that when you get to the Louis Vuitton level and you understand what price is doing, you basically take the LV and it takes you to the LV store. You know what I'm saying? You'll be buying Louis Vuitton once you get through this level. This is basically what I'm saying. Liquidity void is where all big candles and big runs start from. You cannot have any of this without this level. This is where it starts. The fair value gap, you can use that as a PD array for obviously participation. Liquidity void, long, insane fucking run is what that level does and causes. And we see the result. Blast you right to the high. And there's no stopping till it gets there. That's the result of the liquidity void. That's why we say, you take this, you'll be at Louis Vuitton in no time. Especially if you trade NQ or you trade futures like we do. Okay? I'm just showing you on the euro because this is very, very easy to spot, again, on any asset. But this is the important stuff that you can find on Goldbach levels. And again, I'm on a daily chart. It's no different. You can come in on the 1 minute and do this. And then look, you could drop it down to a 27. And then look at that. And go to a 5 minute. Let's check it out. So where does price, look at that. Where does price actually support from? The low. Could you have bought that? Sure. No problem. You know you're in a discount. There's liquidity here. And you're also understanding of the high of the dealing range. So if you're buying, right, you understand the terminus. It's going to be on the high or EXT level. And that's exactly where it fucking stops, right above your EXT level. And obviously in a fair value gap up here. So got to watch for that. So it's like super simple. And again, what do we talk about? And again, we're on a 15-minute now. Where's your fair value gap? Here. But the funny part is, right? I'm telling you, the level is what fucking matters. You're not going to take fair value gaps if they're not in the appropriate level. PD arrays do not work outside of their levels. Time and price. Notice how I didn't talk about time yet. When time is aligned with price in the right GB level, fair value gap is permitted to form and work. It does not work randomly in any area. And where does your dealing range complete? Right at the top. And again, we're looking at a smaller one because we're on the 15-minute, right? So 27 dealing range, great for intraday trading. Great for intraday trading. Same day, next day. You could take an 81 and trade the euro for the entire week. Know exactly where it's going to go. And again, look, what's going to happen? And you can watch this video back and whatever. Tell me I'm wrong. So are we bear? Oh, that's a terrible idea. My candles are purple. Why would you do that? So look at this, right? We obviously stopped at this high, right? There's a bunch of liquidity up here. We're probably going to stop run this, right? Take liquidity and then probably run down because there's a bunch of liquidity down here too. And we're technically going into a little bear run. So, but we're in a premium for now at least. So, you know, but this was, again, I'm trying to give like a good intro to Goldbach levels. There will be another part 2 posted either later tonight or tomorrow. So, yeah. So far, hopefully you find this halfway insightful. And we're going to talk more about these dealing ranges, okay? And also, really quick, I guess, again, there's a bunch of settings in here, stuff that you can use, okay? Um, yeah, bro, and it's a lot of fun. I mean, been doing a lot of this stuff for a long time now. And to have it to the point where ICT does a great job of explaining how things work, but he was not, in my opinion, probably able to give you everything. But I damn sure will. So, let's talk more about these Goldbach levels. And I appreciate ICT. I appreciate Hopi for all the work that they've done to get, um, I feel like the new generation of traders, we're all going to be on some ridiculous shit. We already are. But like, yeah, this is not stuff that like, we'll go more into like the algorithm and you know how the market makers run this, but um stay tuned for more, man. We have a lot to talk about. So I will catch you guys in the next one.